What is up, guys? Welcome back to the channel. My name is Kevin Svensson, and today we're going to be discussing the price of Bitcoin, which has closed a weekly candle above the weekly RSI downtrend line. That has been the topic of discussion on this channel as of recently. It was about 5 days ago that I released this video right here called Bitcoin, the biggest signal of the year has arrived. And we discussed it once again in the last video. And we were discussing the possibility of it happening, and now we have confirmation. The weekly has closed with the RSI above the resistance line. And like I said in the past few videos, this is the most reliable signal, in my opinion, for Bitcoin long term. When the market clears above that RSI resistance, it usually means that we're in the clear for a major run, whether that's just 6 months or a year. But from the original one, Bitcoin went up for basically a full year to our recent top at 74K. But you could also break that down into another RSI breakout where it is 6 months and then again 6 months. So we have the signal. March of 2025 right here is in theory the minimum that we would go up on this weekly RSI breakout. So that is what lies ahead of us right now. And a lot of people are probably thinking, well, we can't really reach our preferred bull market targets by that point. And I agree. Also, today in the Patreon Discord, we were doing a voice chat in there, and one of our moderators was talking about how Q2 of every year is usually pretty bad. On average, Q2 is usually not good. And that is lining up right with the idea of a 6-month high on March before some kind of pullback. And what could that end up looking like? Well, it would probably end up looking like something that you wouldn't want. I mean, most people would probably be really thrown off by this scenario where Bitcoin runs up into March, retraces back to the levels we're at right now, before then hitting the targets that you want. And why is this difficult? It's psychologically difficult because for 6 months you're going up. You think you're getting what you want. You think you're going where you want to go. And then the market sort of just gives up all the gains that you had, but then only to give you what you want later, right after the point of a fake out. In the last video, we were discussing that reducing ratio from the bear market lows to next all-time high and all-time high to all-time high, and how this lines up with about 142,500 on average, right? From low to high, 60,000% divided by 6, 10,000 divided by 5, 2,000 divided by 4, 500, right? That is the ratio that I got. And 142,000 is in the middle of these two high and low ratios. And so this is what it could end up looking like, where it's not a straight line. And why am I showing a chart that's not a straight line? Because I know a lot of people would probably prefer me to just draw a line straight up. Be a lot easier that way. But the world is very unstable right now, financially, economically, in a lot of ways. There's war, tensions are rising, we're deglobalizing. I mean, it's pretty crazy out there if you look at the news cycle around the world, global news. So wartime charts are usually not straight lines. Wartime charts are usually choppy, very choppy. It doesn't mean you can't see growth. It just means that there's some uncertainty in the mix. And so you may get these types of huge washouts before the run that you're looking for going into Q3 of 2025 for that high, for that target to be reached. The idea of Q1, Q2 being the first top and then the second top being near Q3 or going into Q4 is the halving cycle profit indicator that I put on TradingView. It's free to use. On average, 40 to 80 weeks after the halving. In the last cycle, we found both tops. One right near the 40th week, the second one right near the 80th week. Why? Because on average, Q2 is an underperforming quarter, right? Same thing happened right after April, we dumped. If you look at 2023 right here, right as we got into Q2, the market just goes sideways. Looking at this chart, that's where this idea comes from, these two tops. 6 months, our weekly RSI breakout takes us up to our first target, wherever that's going to be. Q2, summer lull, right? And then look to move up into Q3. Around October is what this model is showing. The other possibility is that Bitcoin runs up way higher than we expect, way sooner, to then pull back and get a lower high around that zone, right? That's another possibility. Anything's possible. None of this has to happen. This is just what I think is most likely based on all the data that I'm seeing and studying. And what I find very interesting about this idea too is that it's lining up with the target of the descending broadening wedge. Or actually, I'll just go to Twitter. I posted this on Twitter, the descending broadening wedge target based on the textbook, right? You just measure from the high to the lowest low of the pattern, and then extrapolate that, and the target is sitting just above 100,000. So that means that with the weekly RSI breakout, for the next 6 months, in theory, we're going to be trending up. And the target of this long-term descending broadening wedge is near or just above 100,000. So that means in 6 months, Bitcoin may be sitting right around 100,000, leading right into that time target, Q2, and the price target, just above 100,000, like 102,000 is what the textbook suggests the target of this descending broadening wedge would be. Just mark up that low point, another line from the high to that level, extrapolate that on the possible breakout zone, and it's saying just around 102, 103,000 would be the target according to the textbook, the way that the textbook will instruct you to get a target for a descending broadening wedge. And that's what we're looking at right now, guys. So there's a lot of things that line up here. I mean, I know I'm repeating myself, but 6 months of upside on average, or at least after a weekly RSI breakout, descending broadening wedge target lands us at just above 100,000 with a 6-month timeline to land us at Q2 before things get a little bit bearish or boring or sideways, however you want to look at it, and then have a nice pump going into Q3, Q4 of 2025, right? In the halving cycle profit model, the 80th week ends in October. So this is kind of a possible scenario, right? I know a lot of people would rather be a straight line up, but again, I'm just accounting for the fact that things are not really stable globally right now. So there may be uncertainty. There can be big events that take place throughout this cycle that cause, some price moves that we may not necessarily like. But ultimately, I still think that the cycle is going to play out generally how it always plays out. It just may not be a straight line up. That's it for me today, guys. Hope you enjoyed. Hope you think it's interesting. If you did, smash a like and subscribe to this channel. Be sure to join the Patreon as well. We have limited slots because we're going to limit the amount of people coming in because we don't want it to be too chaotic in there. There's an annual discount if you take advantage of that. And we just started doing morning voice chats so you can talk to me directly in the Discord. And if that is